All right. Yeah, welcome guys to another video. Um, RayFx here, and today we'll be looking at candlestick patterns as well as chart patterns. Okay. The essence of this topic is to always give you a reason to enter the market at certain levels during price action. Okay. These patterns will give you a reason to enter a trade when the market is at certain support levels or certain resistance levels. Okay, so usually when I'm trading, I look at just almost about four candlestick patterns, and also I look at just three chart patterns. I'll talk about charts. I'll talk about these candlestick patterns as well. So the first candlestick that I look out for is the bullish engulfing candlestick pattern. Bullish engulfing candlestick pattern. With a bullish engulfing, this is how it is formed. Usually you have one small red candle. Okay. Oh, sorry, hold on. You have this small red candle. Okay, for the bullish, and then you have a green candle which is bigger, which engulfs. Okay, let's use the right words. You have a green candle that engulfs the red candle. Okay, as if it is the entire body is covering the red candle. Okay, this is a bullish engulfing candlestick. Bullish engulfing candlestick. Okay, this is the bullish engulfing pattern. All right, which is 20. Okay, and this pattern is only important when it is on a support level. Again, support levels are the levels where market rises from. So if we have these patterns at support levels, they tell us that what this means is that I told you yesterday that if you have a green candle, it's a bullish candle. We have a move from the downside to the upside. If you have a red candle, it is a bearish candle because we have a move from the top to the downside. Okay, if you find that this candle is bigger than this candle, it means that the bulls, okay, meaning the buyers, those who push the market up, they have what? An upper hand in the market now, and they are in the market to push the market higher, or they have stronger momentum and they will be able to push the market higher from that support level. That's the psychology behind the formation of this candlestick. Okay. Now the next candle we'll look at is the bearish engulfing. For the bearish engulfing, you have your small green candle, okay, and then you have a big red candle. Okay, a big red candle like this, and this becomes the bearish engulfing candlestick pattern. Okay, if you have this, what this also means is that the bears, those who push the market down, they are stronger than the bulls now, and they are capable of pushing the market further. And this pattern is only important when you find it on a resistance level. And I told you resistance is where market reaches and then it falls down. Okay, so the point where market will swing and then fall down, that is our resistance area. And when you find this pattern over there, this pattern becomes very significant. Okay, another one that we look at is the pin bar. So in the pin bar, we have two formations. You either have it this way, okay, all right. You either have it. So I'm sorry, hold on. I'm sorry. Okay. Um, hold on. Send it to the back. Okay. All right. So for the pin bar, when you have a pin bar like this, okay, this is what we call a pin bar. Some people also call it the hammer candlestick. Okay, now for this pin bar, the pin bar is only significant at support levels as well. Now the psychology behind this pin bar is that you see this long wick over here. Okay, this long wick over here. The psychology behind the market is that buyers were able to do a push the market down to this level. Okay, but then because the buyers are strong in the market, they were able to push price way back to close at this level. Okay, to close at this level. I hope you understand. So this becomes what a pin bar, and a pin bar is identified by this long wick over here. And when you find a long wick and it's at the support level, it tells you that the buyers were very strong at that level. They were able, sellers were trying to push the market uh, to break a support level, but because the buyers are strong, they were able to push price back to the normal. Back, they were able to push the market back up. Okay, so when this forms at a support level, it becomes very significant. All right, so I need you to keep that also in mind. So we call it a pin bar, or the hammer candlestick. There are situations where this pin bar you have it upside down like this. Okay, it's still a pin bar, but you have it upside down. Okay, now when you have it upside down, it only becomes significant at a resistance area. It becomes significant at resistance. What this means is that, let's say buyers, okay, were able, let's make this candle green. It can be any color. Don't just confuse yourself with the colors. Okay, let's say buyers were able to push the market way back up, and then the psychology is that sellers were able to push the market down, overcoming the buyers. Okay, so market was able to close at this level. So what it means is that the buyers are stronger in this area. So when you find them in the area of resistance, it means sellers are strong and you would want to sell the market rather than buy. Okay, we'll look at certain examples inside the charts, and that will make you understand this very well. Okay, so basically these are the four things that I look out for, or the three things that I look out for. And we have also something we call the chart patterns. Okay, the chart patterns are basically the candlesticks. Sometimes when they move, they form certain patterns, and what I always look out for are double bottoms and double tops. I'll explain that. Now, what's a someone asked me what is a double bottom or what is a double top? Okay, so let's say price moves, let's say there's a support level, okay, and then we had an uptrending market. Let me find this. Where are you? Where are you? Okay, and let's say we have a downtrending market, makes a lower low, lower high, a lower low, lower high, lower low, lower high, lower low, and then it gets to this support level. Okay, what will we be anticipating? We'll be anticipating what a lower high, and then the next move that we are anticipating should have been what, a lower low, and then it continues in a downtrend. Okay, however, when this trend is about ending, okay, the downtrend will not continue forever. When it's about ending, it gets to a support level, makes this lower high. Instead of making a lower low, market then comes back to this level and bounces back. Okay, it comes back to this level. The next lower low that was supposed to form now becomes equal to the previous lower low. Okay, this is what we call a double bottom. Okay, and when a double bottom forms like this, you will be looking to join the new trend. The new trend is that the market could go up and form what, high highs and high lows, or it could start to range. Okay, so whenever you find a double bottom, it's an indication of a change in trend. Okay, so usually how you will trade, I'll teach you how to enter the market in a different video, but I just want you to keep this in mind. So if you have something like this is what we call the double bottom. So let me write it here, double bottom. Okay, there's the double bottom. And we have another one. Let's say we have resistance. Okay, resistance is up here. Sorry about the line. Then you have an uptrending market. How would an uptrending market look like? You have price move to the upside, makes a high, a high low, a high, a high low, a high, a high low, a high, and then it gets to resistance. When it gets to resistance, usually this is what happens. You start from your high low, and your next move was supposed to be what? The next higher high, like this. Okay. Now, because but sometimes when the market moves like this, high, low, and then it gets here, it forms a high low. It then fails to make what? A higher high. So it then gets to this level and then bounces off. Okay. And now whenever you see something like this, it means that this trend has ended and it's about to change or consolidate, whatever that is. So this is what a double top, and whenever you see a double top at a resistance area, you would want to sell the market to the downside. Okay, you want to sell the market to the downside. All right, so there's another pattern that I always also look out for. Call it a double top. There are other ones, but usually these are the ones that I look out for. Okay, there are a lot of patterns, but if you say you look at all of them, you will confuse yourself. Just trade, always make your trade as simple as ABC. Okay, so these are the patterns that I always look out for. I don't usually trade any other pattern. If I don't find these patterns, I don't trade. Okay, there's another pattern that is very important. Okay, it is very important. Okay, we have another pattern called, we'll treat the triangles. There's another pattern I treat. Sorry, I treat this other pattern called the triangles. Okay, it's a whole topic on its own. I would love to hear from you guys. If you want me to tackle that, we will tackle it. It's a little bit advanced. You need a lot of time with the charts in order for you to notice them. But these are the simple ones that I always love to share with you guys. Okay, so I think let's hold on to these guys for now. As we keep on practicing, we would come up with a couple of advanced stuff that will help us in our analysis. For now, with these tools, we will be able to still trade the market. We will be able to still do what? Enter the market with confidence. We will always come out with profits as well. Okay, so this is the only thing that I would love to share with you today. From Monday onwards, we'll start analyzing the markets. Okay, so we'll start analyzing the markets, and what I'll do is that I'll send a video. I'll send a couple of market pairs to you guys for you to analyze based on support and resistance and this kind of pattern that I showed you, and then just for you to give us a forecast. Let's say you think price will go up or price will go down. I would love to give you guys the assignment for you to keep on practicing for a couple of times. If any one of you has any difficulty, you should contact me. You can send me a message on Telegram, okay, and then I'll be willing to help you guys. But from Monday, I'll be sending my own analysis to the charts, so that even if you have traders here, you guys can follow the analysis. You can take it as a signal. I don't know how you guys will use it, and then trade it. Okay. All right. So in the charts, let's look at something we have. If you look at it very well, we have this pin bar here, just like we view it, and then we have this long or this big bullish candle. You can see that it is engulfing this candle. So in other words, you can see we have a bullish engulfing candle. At the same time, we have a pin bar all sitting on the support level. And in this case, you would want to sell them to buy the market to the upside. All right, but There are other things that you always have to look out for before buying the market. We'll treat that in a separate video. Okay. There is another candle that I didn't mention. We call it the doji, okay, or the indecision candle. It looks like this. With a doji, whenever it forms, it means that there is indecision between the buyers and sellers. And when it forms like this, you wait until you see the next move. Now, this is the next move to the downside, and then you join the trade to the downside. Okay. And here we see a bearish engulfing candlestick, and then you see how market fell. Yeah. Another bearish engulfing candlestick here, and then market fell in that order. And all of these, we can see them at very significant resistance areas, and they were all performing what they were supposed to do. So that is it about today. I'll see you guys in another video. Bye bye.